Let's do a shallow dive into the topic of leverage. In finance, leverage refers to the use of financing in connection with ownership of an asset to increase speculative capacity and thereby increase the financial gains derived from ownership of that asset. The return on investment on any asset is increased when the interest rate on the loan used to purchase the asset is lower than the income derived from ownership of the asset. You can use leverage to increase the rate of return on an investment with many types of assets, including stocks and real estate. Let's look at how using leverage can increase the rate of return on an investment. Let's assume you've decided to invest $125,000 of savings into residential real estate. Let's begin with looking at what it looks like when you pay cash for that property. Because you are financing the purchase without any leverage in the form of a mortgage loan, your cash outlay is the full amount of the purchase at $125,000. A realistic expectation for rental receipts on that property would be $1,250 per month or $15,000 per year, representing 12% of the value of the property. For our example, we will assume operating expenses such as property taxes, property insurance, and maintenance expense in an amount equal to 35% of the anticipated rents. That's operating expenses of $5,250. That gives us $9,750 per year of net rental income. But the return on our investment also includes the amount by which the value of the property increases over the period of 1 year. For our example, we're assuming an appreciation rate of 4.62% per year, which results in $5,775 of appreciation in value. This amount of appreciation in value, when added to the net rental income, gives us our total annual return on investment of $15,525 for the year. To ascertain our rate of return, we divide this amount by the beginning value of the asset, in this case, the purchase price of the real estate. The resulting rate of return for this cash purchase of residential real estate in our example is 12.42%. Now let's use the same $125,000 for investment in a leveraged investment transaction. We'll use our $125,000 of available cash for the down payment, and we'll obtain a $375,000 mortgage loan to cover the remainder of the purchase price of the property. We'll use the same 12% rate that we used in the cash transaction to compute our anticipated rental income, which on this $500,000 property will be $60,000 per year. We'll also use the same 35% rate that we used in the cash purchase to compute the anticipated operating expenses. This produces a net operating expenses amount of $21,000 for the year in our leverage transaction. Because we now have financing, we must deduct the amount of interest paid on the mortgage loan in computing our net rental income. In our example with a 7.625% interest rate, the amount of the interest would be $28,594. Thus, our annual net rental income, after deducting the interest, would be $10,406. Using the same rate of appreciation in value as we used for the cash purchase, the appreciation in the value of our asset at the end of the year would be $23,100. Our total return on this leverage transaction, which includes both the net rental income and the appreciation in value, is $33,506. The rate of return on our leveraged investment is 26.8% for the year. That's slightly more than twice the rate of return on the cash transaction with the exact same cash outlay of $125,000. This example shows the benefit of leverage to increase the rate of return on an investment. In our example, the rate of return using leverage was more than double the rate of return on the non-leveraged transaction. Let leverage be the key to higher returns on your investments. Leverage isn't only a way of getting maximum returns on the purchase of real estate. You can also increase returns by getting cash out on the equity in properties you already own and reinvesting that cash in more real estate or other high-yielding investments. Call a Retiro Financial Loan Consultant today to discuss strategies for using our creative investor loan programs to amplify the returns on your investments.